Investors, welcome to Stock AI Insights. This is earnings analysis, and I'm your chief AI analyst. Just a reminder, this is for educational purposes only. It is not investment advice, and risk does apply. Today, we're breaking down IREN's Q1 fiscal year 2026 earnings, which dropped on November 6, 2025. But honestly, the quarterly numbers are just one piece of the puzzle. The real story here is a single, massive deal that's set to completely transform the company's future.
Okay, let's just start with the headline, because it's a big one. We're not talking about revenue or profit just yet. We're talking about $9.7 billion. That's the total value of a landmark AI cloud contract they just signed with Microsoft. This one agreement completely rewrites the book on IREN, signaling a huge, decisive pivot straight into AI infrastructure.
And hey, don't just take my word for it. The company's co-CEO, Daniel Roberts, calls it a defining milestone. And he's right. This isn't just another contract. This is a massive stamp of approval on their entire AI cloud model from one of the biggest tech companies on the planet. This really sets the stage for everything else we're about to talk about. So, with that monster AI deal as the backdrop, let's see how the company actually performed this quarter. Because their current revenue, well, that's the financial foundation they're using to build this whole new AI future.
IREN brought in a record $240.3 million in total revenue. And get this is their fifth consecutive quarter of revenue growth. So there's some real momentum in their existing business. But the big question is, where is this money really coming from?
All right, look at this chart because it tells the story of the company's transition perfectly. You can see that Bitcoin mining is still the king here, making up almost $233 million of that total. The new AI cloud business, it's just getting started at $7.3 million. So here's the insight. IREN's established cash-gushing Bitcoin business is acting like a powerful first-stage rocket, providing all the financial fuel needed to launch its much, much bigger AI ambitions. Okay, so top-line revenue looks strong. But how did that translate down to the bottom line? Let's decode their profitability, because this quarter requires a closer look to really get what's going on with their operational health. Now, at first glance, a net income of $384.6 million looks absolutely incredible. I mean, it's a huge turnaround from a loss last year. But, and this is a big but, we need to dig a little deeper because a major non-cash item is really inflating this number. And this table here clarifies the picture perfectly. Look at this chart. You'll notice that the reported net income includes a massive $665 million unrealized gain. So to see the core operational performance, we have to look at a metric called adjusted EBITDA. So what is adjusted EBITDA? As this slide shows, it basically gives us a cleaner view of the profit from actual business operations by stripping out things like taxes and one-time paper gains. For IREN, that number was $91.7 million. And that's still a very strong result. It's the true measure of the health of the business that's funding this whole strategic pivot. All right, enough about the past quarter. Let's pivot to the future, because this is where the story gets really compelling. The company has laid out an incredibly ambitious blueprint for its AI cloud business. The objective is crystal clear. They want to become a major player in the AI cloud space, providing the massive computing power that other companies need to train and run their AI models. And that Microsoft contract, that wasn't the end goal. It was the starting gun for a much larger expansion. Now, look at this chart. It lays out their roadmap perfectly. They're starting with the nearly $2 billion in annual recurring revenue from that Microsoft deal. From there, they plan to aggressively expand their fleet of GPUs, those powerful processors that are essential for AI, all the way to 140,000 units. The target? A staggering $3.4 billion in AI cloud revenue by the end of 2026. And this isn't just some number they pulled out of thin air. It's anchored to specific real-world assets. You've got the $1.9 billion from Microsoft, another $1 billion projected from their Mackenzie and Canal Flats sites, and $500 million from the existing Prince George facility. They have a tangible plan for every single dollar of that target. This quote from Microsoft's Jonathan Tinter really gets to the heart of why this is happening. He highlights IREN's vertically integrated model. That just means they control everything, from the power grid connection all the way to the graphics processors. And in the mad dash to build AI infrastructure, that control is a huge advantage. It means they can build faster, cheaper, and more reliably than their competitors, making them a strategic partner, not just another supplier. So, what's the final verdict on this quarter? Well, it all comes down to that pivot.
Let's put all the pieces together and really understand what this moment means for IREN.
This comparison really sums it all up. IREN is successfully using its strong, profitable Bitcoin mining operation as a launchpad for a massive, and thanks to Microsoft, a very credible pivot into the AI infrastructure space. We are literally watching them transform from one type of company into another.
So, what are the crucial points to walk away with? First, that Microsoft deal is immense validation for their AI strategy. Second, their profitable Bitcoin business is providing the cash to make it all happen. That means the focus now shifts entirely to execution. Can they actually build out these data centers and deploy all those GPUs? And finally, that vertically integrated model gives them a level of control that is a key competitive advantage.
And that brings us to the final, critical question. The strategy is set, the capital is flowing, and a cornerstone customer is locked in. The entire story now hinges on one thing: execution. Can IREN turn this ambitious blueprint into operational reality and successfully reach its $3.4 billion orbit? The verdict is in. A massive pivot has been launched, funded by existing operations, and validated by one of the biggest names in tech. The only question now is one of execution. Drop a 1 in the comments. See you next earnings.